You're listening to AI Prism from Seoul Economic Daily.
149 trillion won, 17 to 18%, and 8,476. It's Wednesday, July 1st. Here's what today's story could mean for the Korean market.
Well, today, we are looking strictly at market flows and catalysts, because to understand what's actually moving the needle for you, we really have to track the structural forces driving the capital.
Right, so let's start with that massive first number, 149 trillion won, which is roughly, what, 107 billion US dollars?
Yeah, right around there.
That is the net amount foreign investors sold from the KOSPI in the first half of the year. I mean, on the surface, hearing about $107 billion leaving the market just sounds like a mass exodus.
It really does sound like panic, but context is everything here, because over 87% of those outflows were absorbed by just two giants, Samsung Electronics and SK Hynix.
Oh, wow. Just two companies.
Exactly, just two. And it wasn't because foreign funds suddenly lost faith in them. It actually comes down to underlying market mechanics.
Wait, how so?
Well, both of those stocks surged to index highs recently, and that triggered this heavy mechanical portfolio rebalancing from foreign funds.
So is this massive foreign outflow less like investors fleeing a burning building and more like a mechanical thermostat kicking in because the room got too hot?
Yes, that is a perfect way to look at it. The thermostat doesn't hate the heat, right? It's just programmed to maintain a target temperature.
Makes sense.
In this case, foreign funds have target index weightings. So when Samsung and SK Hynix grew to take up too big a share of their portfolios, the algorithms automatically trimmed them down to balance things out. So it's not panic selling, just strict discipline.
And that discipline makes a lot of sense, especially when you see the massive growth signals these two companies are putting out. Like Samsung Electronics and SK Hynix just jointly committed 90 trillion, won about $64 billion to build out AI data centers in Southwest Korea.
Right, and a massive domestic investment like that absolutely interacts with a major domestic policy shift happening right now.
Okay, what shift is that?
So the National Pension Service, or the NPS, is activating a new 20.8% domestic equity cap for July. Essentially, they're mandated not to hold more than 20.8% of their total assets in domestic stocks.
Wait, really? If they're suddenly forced to cap their holdings, couldn't that trigger a massive sell-off as they, try to get under the limit?
It could, but they use a 30-day moving average method to prevent exactly that scenario from playing out.
Oh, so it's not based on a single day's price.
Exactly. Instead of looking at today's price and just dumping shares all at once to hit their target, they average out the asset prices over the last 30 days.
Got it.
This acts as a shock absorber. It spreads out any necessary selling so you don't get a sudden, large-scale market dump in a single afternoon.
That is a crucial buffer.
Yeah.
But not every stock has that kind of protection, which brings us to those other numbers from our open. Like, I saw Wemade's founder just sold a 39.33% stake for 920 billion won to an Alibaba-Connected firm.
Yeah, a massive localized shift.
Right, and then EcoPro BM announced a 1.2 trillion won rights offering at a steep 20% discount, which caused that brutal 17 to 18% overnight aftermarket crash. I mean, what actually happened there?
Right. So with EcoPro BM, a rights offering means a company is asking its current shareholders for more cash in exchange for new shares. But because they're creating a massive amount of new shares and selling them at a huge discount, it severely dilutes the value of the shares already out there.
Oh, okay.
Yeah, and that sudden heavy dilution is exactly what caused that violent crash overnight.
So you wake up, and suddenly your piece of the pie is much smaller, showing us that beneath the broad market index, these sudden stock-specific shocks can completely blindside you. So we really need a bottom-line takeaway here.
The 149 trillion won in first-half foreign selling we open with may finally be exhausting itself, as quarter open months like July historically flip to net buying.
And while that NPS moving average prevents a single-session dump, it creates a structural ceiling of 74.4 trillion won in pending selling. If our opening 8,476 KKI close approaches 9,000 a cap, you must factor into your large cap positioning.
Ultimately, two sequence catalysts this week: Samsung's Q2 earnings on July 7 and SK Hynix's NYSE ADR listing on July 10th, which could bring structural dollar inflows to offset a weak one, are your clearest signals for whether large cap momentum will restart in the second half.
That's today's AI Prism, Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a One IFRO award-winning series. We'll be back tomorrow. #KOSPI.
You've been listening to AI Prism from Seoul Economic Daily.